Hey traders, Jason here from Leavitt Brothers. Happy Wednesday. In this video, I'm going to discuss how you can trade a stock when you miss the first move. Oftentimes, a stock will set up, but you miss the breakout. Or you just weren't paying attention to the stock in the first place, and you only discover it after it's made its first move. It's frustrating, but you don't have to give up on it. Okay, many times there's a second chance to get in. So let's go through a couple of examples. Okay, so here's Garmin. Okay, obviously based for a while, surged, was trading sideways, easily definable resistance, slanted support lines, so the stock was getting squeezed by converging trend lines. So looks good as a breakout play. Next day, stock does this. Let's say you don't trade it because it gapped up at the open and you don't want to chase a gap up, and then it breaks out and you didn't really want to chase it. You were hoping it would go up to resistance and move sideways for a day or two and then break out. So let's say you missed it. You didn't trade it. Okay. So what you can do, wait a couple days, and this happens. Okay. So first you get the breakout, then it follows through. It trades 3 days in a sideways pattern, and now this is what I do. Okay. I zoom in with an intraday chart. In this case, a 60-minute chart. And I look for a moving average that is going to be in sync with the chart. Okay, in this case, the 21 EMA. You can see it was support, pretty good support here, resistance here, support there, little resistance there, decent support there, not perfect, resistance, started scooping up the stock there. And as you can see, it's supporting the stock there and there. Okay, so if you missed the first move because either you didn't want to play it, or you missed the first move because you weren't even watching it in the first place and it showed up that night in some scan you did, you don't have to quit. You don't have to give up. You don't have to remove it from your list. You could zoom in with an hourly chart, look for a moving average that it seems to be in sync with, in this case the 21 EMA, and you can see a little pattern forms here, and then it does this. Okay, so I often do this by choice. Okay, sometimes I don't even want to play the initial breakout because sometimes the stock will, break out and immediately fail. Okay, oftentimes I'll wait till after the breakout. I'll wait till it stays above resistance for a couple days and proves itself. Then I'll get in at a slightly higher level, but my odds of success are higher. Okay, so again, you missed the first move, zoom in with the hourly chart, look for a moving average which is in sync with the stock, and then you could play the second move. Okay, let's look at another one. Here's Home Depot. This one was recently posted at Leavitt Brothers. It was in the midst of a huge uptrend. Okay, this pattern here was like a pullback within an uptrend. Obviously, we have a big base here, resistance at 192. Okay. So you're looking to play a breakout. Then this happens. The stock gaps up and runs higher. You don't like to play gap ups for whatever reason. You're just not comfortable chasing a stock like that. Or maybe it wasn't even on your list in the first place and you did a scan that night and you realize, hey, this stock just broke out to a new, multi-month high on strong volume. So you're thinking, shoot, I missed it. But you don't have to miss it, okay? The next day, I'm going to zoom in here. And what happens is the first day that it broke out is essentially this. This is an hourly chart. So the first day it did this. The second day the stock moved down, okay, and traded within the range of the previous day. But you'll notice here that the 21 EMA is coming up. And we don't know if if it's going to support the stock or not, but it's at least an interesting moving average that we want to keep an eye on. Okay, then this happens. Okay, it does in fact, it finds support here at 194. You can see several hourly candles find support there. The hourly comes up and supports the stock, and then today it takes off. It's up, well, as of the time I grabbed this chart, it was up about 359. Okay, so again, if you missed the first move because you didn't want to chase the gap up or because you weren't even watching it, you wait a couple days, the stock moves sideways. Okay, it's literally a case where you missed the first move, but then the stock moves sideways while a moving average comes up and kind of scoops up the stock, and then you can try to hit the second move. Okay, again, I often do this on purpose. I often don't even worry about the first move. I want it to move sideways into a moving average that's going to scoop the stock up and push it higher. Let's look at another example. Here's Glue Mobile. Okay, kind of a messy chart, lots of gaps, lots of inconsistent stuff. Not exactly a smooth moving stock. Gaps down, but then starts trading in between these converging trend lines for about 6 weeks. Okay, so perhaps you're looking to play a breakout here. Then this happens. Okay, boom. Okay, this would not be an easy trade in my eyes because you have 4 consecutive up days and you have weakish volume here. So it's kind of hard when you have all this up and down movement. It's kind of hard to buy here when you have up and down movement, inconsistent movement, volume not really strong. It's kind of hard to chase that, and then it went up so much that it's definitely, you definitely don't want to chase it at the close. All right, so let's zoom in and see what happens next. So if you wait a couple days, what happens is stock pushes higher the next day and then closes at its low, and then has a somewhat of a quiet day where it pushes higher and then closes back down. Okay, so again, I would zoom in here with an hourly chart. Let's do that, and let's see if we can get another entry. Okay, this is what happens. Okay, so the market, the first move you missed, okay, and then it trades 2 days in this range here, and you can see that the 21 is starting to come up and support the stock. And if you go back, you can see the 21 supported it there, 21 supported there, resistance there, it supported the stock there, and then it's starting to support the stock there and there. You can see resistance there. So this is a moving average I want to keep an eye on. So you miss the first move, the stock starts to move sideways, the 21 starts to come up and support the stock. So there's your opportunity to get in late. Okay, I don't want to buy at the close of the first day because you don't know if it's going to immediately give everything back. But if you give it 2 days, let it calm down, a moving average comes up and starts supporting the stock, there's your opportunity to get in again. Okay, and then this is what happened. That area that I just identified was right here. So you can see the stock went from the high 9s to the high 10s. That's a 10% move. That's pretty good. Okay, so again, you missed this original move, but then you waited a couple days, the stock gets scooped up by a moving average, and you can play the second move. Okay, you don't make as many points, but your odds of success are higher, and your stop often could be much tighter. Because if I'm buying here, let's say I buy a bounce off of this, wait till an hourly candle closes higher, you can put a stop like right here. Okay, so my odds of success are higher, my stop is closer, so I'm not going to make as many points. If I compare like buying a breakout here, which maybe it works, maybe it doesn't, by buying here my odds of success are higher and my stop is tighter. Okay, and I kind of like that. I'd rather be in a position where maybe I'll make 1 point instead of 1.5, but if my odds are better, I kind of like that. All right, let's look at one more example. Here is a 2U. This is one from today. Obviously the stock. All right, so what happened here is the stock had broken out last week. Right, we had the 200-day moving average here in red. We have a resistance line here and also in red. Volume on the breakout wasn't that great. It was probably average, nothing special. Let's say you missed the breakout. Let's say you weren't even paying attention, but the stock showed up on one of your scans. So now we have this little pause here, okay, which is exactly what I want. I'm going to miss the first move, but then I'm going to look for the stock to pause at a higher level. Okay, so I'm going to zoom in with an hourly chart, and what I find out is that the 200-day moving, not the 200-day, but the 200-hour moving average, the hourly 200, is supporting the stock. You can see here and here. That gives you a frame of reference. That gives you a stop to use. And then today, this is what happened. It continued up. Okay, as of the time that I grabbed this chart, it was up $1.60. Okay, so again, you missed the first move. Okay, but then you wait till the stock moves sideways for a moving average to come up and scoop the stock up and push it higher. Your stop could go below the moving average, which means your stop is pretty close. And because the stock has maintained a level for a couple days, your odds of success are higher. Okay, so if I look at all these, just to kind of summarize, you can see in the case of Garmin, you missed the first move, but then it formed this little pattern here. Zoom in with the 60-minute chart. The 21 scooped it up and pushed it higher. With 2U, same thing. You missed the first move. Stock trades sideways for a couple days. You zoom in, look for some moving average which is in sync with the stock. In this case, it was the 200. With Home Depot, you liked the breakout, but it gapped up and you didn't want to trade it, so the stock moved sideways, and it eventually got scooped up by the 21 on the hourly chart. And then with Glue Mobile, big move out of this base. Tough to trade because it had already been up 4 days in a row. But again, wait for it to settle down for 2 days. Look for a moving average. In this case, the hourly 21, came and scooped it up really well and pushed it up a whole point. Okay, you guys get the point. Just because you miss a trade, you might miss it because you weren't watching it. You might miss it just because it just didn't feel good to enter because, for whatever reason, you just didn't want to chase it. Maybe it gapped higher. Maybe it opened flat, but then immediately surged, and maybe you have a policy, you don't buy stocks like right at, in the opening minutes. Whatever the case is, sometimes we miss trades. But it's okay, because oftentimes you can zoom in with an hourly chart, zoom in with some other intraday chart, and you often get a second chance. All right, thanks for listening. If you like the video and want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube and be alerted of new content when it's posted. Come check us out at Leavitt Brothers. We provide market analysis and trading ideas to individual and institutional traders and investors. Again, thanks for listening, and I'll see you next time.